Hi, my name is Jerry Salam, a Chief Strategist at Tricio Investment Advisors, and for the week of the 3rd of August, 2026, we're shining our spotlight on the U.S. 10-year TIPS yield. In the chart you can see in front of you, this is a weekly chart going back to the early 2000s, and you can see that TIPS yields are pretty high, around 2.4, 2.45 right now, and which should be pretty attractive for most investors. Remember, these are inflation protected yields, so if inflation runs hot because the Fed can't or won't raise rates, then you should, in theory and in practice, get a decent pickup on top of the inflation rate. Now, the reason we're saying that 2.4 and above is a pretty attractive rate is yes, we have spiked above here in the past, but not for long. And the spike above 3% back during the global financial crisis was an aberration where people had to sell what they could, not what they wanted to. So for now, we're looking for tip yields to be attractive. Our view on inflation is that it will come under control at some stage, even though the Fed has let it run hot for a while. But a lot of these circumstances are out of the control. The Russian attack on Ukraine, US attack in Iran, Biden's attempt to get firms to move to the US by putting in over $1 trillion into the US economy, all these things fueled inflation over the last 5 to 6 years. And of course, the bounce from the COVID lockdowns. So at some stage, once the US war in Iran is over with, hopefully, energy prices will fall sharply again, and we'll get inflation readings coming down over time. And TIPS yields at 2.4, 2.5 will, in hindsight, look pretty darn attractive as we drift down below 2 towards 1.7 again. For now, we think these levels are worth looking at. Keep an eye on it and see if, well, hopefully we'll be right. For further information on our research insights and our Ask a Buddy service, where we help our clients manage risk and build resilient portfolios, please contact us at info@tricio-advisors.com. Thank you.